From Rabobank, this is a RaboResearch food and agribusiness podcast.
Hello, welcome to another episode of Consumer Foods to Go Wrap, our monthly wrap-up of what has happened in the beautiful world of food, recorded on the 25th of November. So what has happened in the days after? You will probably have read that yourselves. And as is new, it's not only a podcast, Consumer Foods to Go Wrap, it's also a video. So please check us out on YouTube. Just Google for Consumer Foods to Go Wrap. Great. Well, a lot has happened in November. Can I start with you, Maria? What is that? What was it that caught your eye?
Hi, Cyrille. Hi, Tom. Hi, everybody. Well, it's 25th of November, as you said, and tomorrow is a big day in the UK. So it is about budgets. It is about public deficit. It is about what can happen to the consumers next year, depending on what happens to the taxes. And what we notice is that there is a need to collect money, and therefore all sorts of tax increases are being considered. Some, for example, in France, they are considering reviewing and increasing the real estate value of the properties, and therefore taxing the consumers upon that, or adding a new tax on fast food franchisees. Yes, okay. That is one of the considerations. In the UK, on the plate, we have tourist tax, we have taxing on electric vehicles. Of course, we have also potential taxes or charges that will not affect directly the consumer, but perhaps the companies, like, again, an increase on minimum wages. So there are different elements that may clearly affect not only today's consumer sentiment, which is relatively sluggish in Europe, but also next year's affordability and spending power. So this is what is going on my head and on my mind as we do this podcast. What will happen to fiscal measures next year?
Yes, and consumer sentiment is fantastic already. So this was definitely going to help, not into the next year.
Let me tell you something about that. I was looking at numbers, and actually disposable income has been increasing steadily in Europe, but consumer sentiment sort of improved until October 24, and since then has slightly gone down, moving sideways and going slightly down. So really, consumers are not necessarily reacting to what has happened in their disposable income, which has improved, but sentiment is much worse than that. And
same thing in the US, Maria.
The tax credit is not going to make an improvement.
Sentiment here is as bad as it's ever been. Effectively, we're near record lows, and it leaves you wondering what's really going on. Is it all the negative news we get on our social media feeds, or kind of being bombarded? But that's a big driver of consumer spending here too, is that negative sentiment. So interesting to hear the same thing over there in Europe.
Yes, exactly the same.
And Tom, potentially more private label. You visited the PLMA, the Private Label Manufacturing Association trade show in Chicago. Tell us all about it.
Well, talking about consumer sentiment, it's a reason for consumers to trade down at this point in time, and that the PLMA was a record-setting year. Private label is still growing in the U.S. with that consumer looking for ways to save money. Private label, on average, has seen about 3.5% growth so far this year versus national brands up about 1%. So private label continues to do very well. We're at 23% of total market share. I think around this time last year, we were just over 20. So It continues to grow. The PLMA itself, 3,000 booths, 35,000 products, over 60 countries represented, record international participation. I know it's not as big as the European private label event, but we're getting there.
It's getting close. The one in Amsterdam, which the next one will be in May, is 4,000 booths, I believe, a bit more than that. So
we're chasing you guys. We're on our way. But I was just going to mention the international side. So a lot of it is, there is a lot of European presence over here. But there was over 60 countries represented at this event. International was up 30% since 2023 as far as booth space and a floor space used by international. And so lots of Latin American pavilions. We saw A lot of Europeans, as I said, Netherlands, Belgium, Spain, all three strengthening their presence at the event. Asia was also very present. Lots of Korean flavors. I saw lots of Vietnamese, lots of Japanese remaining strong. And of course, the U.S. has its presence also. John Rempel, the U.S. CEO of Lidl, spoke, and he said 85% of their products are still sourced from the U.S. So U.S. still a big player, but certainly Europeans and other markets playing a bigger role over here. As far as the products in the growth areas, convenience, a lot more convenience, snacking still very big, ready-made kind of or partially made food products, whether that's kind of like a partially made chicken patty or something like that, or a full ready-made meal kit. Those types of products are there. Premium on the menu also, lots of real foods, lots of real dairy, animal proteins, but also higher quality ingredients and brands. There was a Dubai style chocolate bonbon by Via Emilia that, I mean, mouth watering, just you see that in the case. And I was like, what is that? How do I get my hands on that? That's not something you think of as for private label. It's just a very premium looking product. So the attitudes and the products here in the US are certainly changing around private label as we see more development, innovation, and exciting products like that coming out. Self-care and wellness. Also want to mention that was another big space. Functional drinks. There's a collagen protein latte by Health Verve, which seemed to be getting quite a bit of attention. And proteins. Americans, I don't know what it's like in Europe, but Americans can't get enough protein. Real meats, added proteins, protein powders. You're adding protein to things like oatmeal, a 10-gram protein oatmeal breakfast by Full Circle. Okay. Full Circle market. Yeah, just lots going on.
My eyebrows went during your discussion here, just up and down because this. Yeah. But the one thing that stands out for me is what you said: the international attendance, given tariffs, given how currencies have moved. Still see in private label, I guess, the US as the promised land, rightfully so.
Yeah, there's no doubting the investment from international. They're big believers, even perhaps bigger believers than some of the US suppliers, at this point, despite the tariffs. They're just willing to bite the bullet to get in the market, seeing the long-term gains in the future here.
Okay, let me take on what you said on Dubai chocolate, Dubai bonbon, you said. I saw a Dubai pizza. So I think we might be peak Dubai here.
That
sounds like it. I don't know about it.
Let's be clear.
I only saw it on the picture. I haven't tasted it. So for the audience, sorry about that. And you go out and taste it. It's sold by a Spanish company. But I was at the GRLC, the Global Restaurant Leadership Conference in Barcelona this year. And it's a gathering of mostly quick service restaurants, mostly actually burger chains, where the executives discuss the matters at hand in the restaurant space. Really interesting. Two things really stood out for me. One thing, and let me reference the source here, which was Technomic, which is a industry leader in terms of restaurant data. They showed a graph on the number of product introductions in restaurants, in chains especially throughout the years. And every single year since 2021, the number of product introduction has gone up. And especially, they said, in September 2025, it's been at an all-time high. It is phenomenally interesting to see how many new products restaurants are launching. And I assume that this is because there's no growth. So the one way to grow, and when I say no growth, market growth. So the one way to grow is to come up with, new exciting stuff to attract the consumer into the restaurant. Whether that's a Dubai pizza, I'm not entirely sure. But again, people are trying. But this is also putting a lot of strain on the restaurants because what they basically said is, more product introduction. You need a supply chain to achieve that, from menu to kitchen to sourcing of commodities. All the steps need to be adjusted each and every time. And occasionally it can be easy if you just add a new flavor to a certain dish or ice cream. But it can be quite difficult to achieve that. So that's one of the challenges that restaurants are facing right now. And the second takeaway there was, and I moderated a roundtable event there where the point of discussion was, is the menu driving the supply chain, or was the menu driving the supply chain? And is the supply chain now driving the menu? Which is counter to what I said in my first point, where the menu is driving the supply chain. But given how coffee, cocoa, butter, and some other of the commodity specialties have fared in the last, months, quarters, just general supply chain issues, sourcing from China for some, especially packaging, seems to be a challenge. So that it is a really interesting situation right now that we're in, where, on the one hand, you try to improve your menu as quickly as possible because that might give you a competitive edge. But on the other hand, supply chains are getting more and more constrained. A really interesting conundrum for the industry. I think that the takeaways, and it won't change very soon. Anything you're hearing on the restaurants, Maria or Tom, on this?
I can tell you that perhaps of the questions, the open questions, there's a bit of everything. Clearly, in the case of hamburgers and chicken, the prices of beef are driving also the increased demand for chicken.
I didn't mention beef. How stupid! Sorry. Of course.
Well, now it comes to the picture. Because yes, chicken prices have increased a lot, but they are still cheap. Chicken is still cheap compared to beef. So there is where the supply chain, the cost of inputs is affecting the menu and shaping the menu. There has always been everyday limited time offers, and perhaps they are trying harder now. Yeah. So that could be one thing. But also we are seeing more and more new products, low priced, to attract consumers in a tight budget. So, for example, I was reading about a restaurant that is a French chain. Next to their main menu, we are adding a few elements like entries at €2.50, desserts at €2.50, and main courses, including meat or fish, at something like €10. So also people in a tight budget could go. Now, obviously, if the standard main is €18, and you bring one at €10, you have to do something with your assortment and your supply chain. So I think there are quite a few elements playing. Sometimes it's pull, sometimes it's push from the supply chain.
Yes. Hey, Tom, you will be launching, well, we're recording this on the 25th, so it may be out by the time the podcast is out, and the video. A note on, credit card transactions and in food retail and food service soon. So what are your takeaways from a restaurant point of view? What are the trends that you're seeing?
Yeah, so I was at the Restaurant Finance and Development Conference just over a week ago also. So I saw the U.S. take on investments and what's going on with restaurants. Main themes that we saw, traffic remains a challenge for many, but at the same time, there are those that are doing really well in able to show the consumer value. So Chili's continues to post double-digit growth in this environment where other restaurants are really struggling to get people in the door. And the key words that kept coming back at this conference were value, of course. And Chili's offers a 3 for Me deal with it's a $10 to $15 meal, and then a $6 margarita, which you can drink. It's pretty affordable. Particularly when on average, you're going out for a drink and you're probably $12. You're double that for your average margarita. So the margarita of the month is $6. That's value to consumers right now. Yep. But also, it's not just value; it's the hospitality. That was another big theme. So those restaurants, those stores that offer hospitality, and that includes better service and just the customer experience overall. They're doing very well. And that seems to be a common theme where you walk in the door and you feel welcome and excited to be there, and the customer engagement is strong. That seems to be a winning recipe. So there's winners and there's some losers in this space at the moment. There's a divide in kind of how people are spending, and we're seeing it in terms of the traffic and the transactions. Transactions overall in restaurants continue to decline in the US. And then as far as retail, we see discounters. I talked about private label. Discounters are primarily private label, growing. And then at the same time, premium is growing. So the likes of Sprouts and kind of some of these more premium grocery stores are also growing. The middle ground seems to be kind of a little bit of a desert at the moment for where consumers are spending. So bit of a paradox. They're spending up, they're spending down, but they're not spending right in the middle.
Yes. Let me wrap this section up here. And well, this is the K-shaped recovery, or what we call the hybrid consumer in Rabo, which we'll definitely see. The other takeaway for me is global food. At the GRLC, they showed some numbers on how Mexican style food is growing, and Korean or Asian and / noodles. Close to double digit, if not double digit, across the world. Whereas, burger is growing a couple of percent. So there's a big difference in the formats there. That warrants another discussion. If you'd like to know more, please feel free to reach out to us on these topics or more. So as you know from previous editions, we follow a sort of a structure. We did the hello and welcome very briefly. This was the menu, as in the part that we sort of bring from what we see in the world, where we go, where we travel, because we go and travel and see a lot, and we follow the news very closely, of course. Let's move to the specials section. And the specials section is highlighting pieces of research done by us or our colleagues in RaboResearch, especially RaboResearch Food and Agribusiness, that warrant your attention, dear viewer or dear listener. And the first one I like to take here is our Agri-Commodity Market Research Report, the Agri-Commodities Outlook for 2026, which launched mid-November and is our annual report providing a view on, the main commodities in the sector, which, of course, have an impact throughout the entire value chain. Interesting read, again, every year. I think the most important one, and we touched upon it before, is a big factor at play, and also sort of a risk factor here are the tariffs in the US, especially. We've seen what happened with coffee, tariffs on, tariffs off, and many other tariffs, of course, from Brazil. So that is one of the unknowns and determining a lot of the price fluctuation and the volatility in commodities. The other thing, and this is also US-based, subsidies. There's quite a bit of subsidies potentially for agriculture, especially in the US. Some changes here in Europe to around the common agricultural policy, but especially in the US. But I think what you're all waiting for as an audience is which commodities are going to go up and down. So have a read of the report, but to give away the highlights here, palm oil is the one where we expect the most price increase, which has to do with the local situation, especially Malaysia, Indonesia, around demand for biofuels, but also a slightly disappointing season in terms of rain, so a slightly disappointing harvest. So that we expect a lot of price movements in that particular area. And the one that goes down the most, we believe, relatively, of all the commodities that we track, is soy meal, which is mostly, of course, used in the feed space. For you, the most interesting ones, probably as an audience, are coffee and cocoa, because we've seen this massive volatility roller coaster in both commodities. So in cocoa, we expect prices to come down a bit, driven partly because of more plantings being done outside of the two main countries here, Ivory Coast and Ghana, where most of the cocoa beans are being sourced, 60-70% globally. Other countries, when prices go up, farmers start to plant, and it takes some time, of course, to get the harvest going. But our colleagues believe that as from 2027, we might see some of the fruits there, almost literally. Which is really interesting because, traders might preempt that and drive prices a bit lower. And, which as consumer people, like the three of us, we see some demand destruction here as well. Not huge, but, with high prices of chocolate in the market. It's
they're still making chocolate Dubai bonbons. Dubai chocolate bonbons. People are still buying them.
So that is the hybrid consumer. There is an audience for
that's the conundrum.
Whatever.
Yeah.
No, but actually, we have seen in Europe, even visually at the supermarket shelves, the space of sugar confectionery growing at the expenses of the chocolate confectionery.
Of course.
So it is even obvious at first sight. This has happened. Some demand has been destroyed.
Nerds. Tell the European audience what nerds are. They may not know.
Oh, nerds are, little tiny candy, crunchy ball things that, they come in these little boxes, and they're actually making Nerds ropes now, which is a gummy covered in the Nerds. So it's a all, sugar confection, lots of bright colors and all the things that kids love, and that RFK is trying to ban from our food system.
Which, by the way, I think I'm showing my age. I'm sure that my two kids actually know what they are, because I think they've made it into Europe now. But I'm just showing my age.
Cyrille, have a chat at home at the dinner table. Yeah. Kids know it. You can buy them in Europe.
Okay. Moving on to coffee. Whereas the same thing is happening there. We expect prices to come down a bit, partly because of demand destruction. Higher prices, obviously, demand might slow. People may have moved to other types of drinks for perhaps energy drinks, or there's, of course, in the US especially, a big market for soft drinks with some energy or other functional ingredients. And on the supply side, which in both cases probably is more important, just a more balanced market, where the market moved from a surplus to a deficit. We believe now that has gone, and that we're now at a sort of an equilibrium. So prices might come down here as well. Goodish news? ? Coffee prices coming down, cocoa prices coming down, Maria?
The question is how or when will that affect or trickle along the value chain, right?
Yes.
How much is the hedging in place? How much is the already bought ahead product? So what is going to happen, and when, and for whom? Because when there are these movements, there's always people that are ahead of the curve and people that get squeezed.
Yes.
So that's a bit the open question.
Yeah, which is a great one, because it took quite some time, especially in chocolate, for prices to go through the value chain and retail prices to go up. I haven't seen them coming down, while cocoa prices have come off a bit. Yeah. So who knows? Perhaps they may not come down as much as people would expect.
The interesting issue is also that corporates remain interested on cocoa alternatives. So that means that either they are scared of the spikes on prices being repeated, or that they are forecasting that scarcity and high prices may be a recurrent issue. But the interest on cocoa alternatives remain high.
Yes, absolutely. Last time we spoke about Anuga, some of the German companies are using Castroviejo, which is a chocolate substitute. And you now can find it in, I think, in buns from Haribrot, which is a German industrial baker. They use that instead of real chocolate. Well, real. Who knows what additives there are in that? But yes, companies are moving on, which is or looking around. Not necessarily moving on, looking around for alternatives. Let's see what happens if prices come down or not, and how the market responds to that. So that is, dear audience, probably one of the reports that you should definitely get. Our website, knowledge.rabobank.com. When you're a client of Rabobank, you can download everything. When you're not, feel free to approach us, and we might be able to help you out and getting all of our insights to you. I think this was the main special for today. Let's move on to made to order. Tom, you already hinted to this. What's happening with the consumer in the US, and perhaps Maria also in Europe?
Yeah, you use the term K-curve, or the bifurcated consumer is another way they're putting it. What we're seeing is kind of a divide in the income balances for US consumers. So basically, those earning over $200,000 a year are still doing well and still spending and able to do things like go out for omakase sushi for, once a week, something fancy like that. Not saying that they are, but they're spending kind of as if on these more higher end things. At the same time, a lot of consumers, those earning under 200K, and I'm generalizing, but trying to give some numbers there. They're the ones that are really hurting and trading down. And we see a lot more sort of value seeking behavior from those consumers. They're on budgets. They're trying to buy less in general. They're trying to conserve more. They're squeezing out every last bit of the toothpaste from the toothpaste container. These are the things that they're trying to do to make the most of their dollar, stretch the dollar. But a key point to kind of highlight the spread in spending and the power of the higher income consumer. Over the last 12 months, the top 10% of consumers in the US accounted for 50% of all spending.
Yes.
So it's a staggering figure when you think about just how concentrated that spending actually is. And so that's a big consideration for food companies is how do you capture that consumer while also not alienating and seeking, the value for the consumer, the remaining 90% of Americans who are more on a budget. So something to think about there. That's the bifurcated consumer we see, and we see spending patterns mapping this. Like I said, we see a lot of discount growth and we see premium growth. I mean, I'm not saying that the higher income consumers aren't trading down, because they will still seek value if value is there. Yep. And vice versa. You do see some of the that 90% of consumers in the US, they're still ordering delivery, as they say, putting your burrito in a taxi to get it.
But surprisingly, I was looking at the numbers that will be out in the note that will come out in the next week or so on spending. So online delivery of prepared foods, that is, so not retail food, but food service food, is doing incredibly well in the US. Whereas other formats are just struggling all the way through.
It's quite an impressive figure, and it shows that it's still a developing area. There's more restaurants adding that capability on. People love convenience too. So the more convenience they can get, they're going for it.
That's it. That's probably, I'm willing to pay for it. Yeah.
Absolutely. Maria, did you have a perspective in Europe?
Yeah.
No, in Europe is pretty similar. What we hear, people in the business saying is that actually the lower income part of the population has already been, for example, expelled out of food service. Now the concern is whether, for example, fiscal measures may squeeze out of the business another chunk of the population. That is the risk. The difference between the most affluent and least affluent is a bit narrower in Europe structurally than in the US. But we are seeing also this sort of bifurcation in the consumer, but also the same consumer behaving radically different in different occasions. Mm-hmm. That started to happen and keeps happening. So pretty much similar patterns to the US, perhaps less dramatic in terms of population in need, but still quite significantly similar patterns. Commenting on what you were mentioning about delivery, for certain consumers that are very much geared to convenience and were making a big use of food service, actually delivery is a way to manage costs, because they are using delivery not in place of a homemade meal, but they are using it in place of a visit to the restaurant.
Yeah.
And that makes it cheaper. You ring-fence your cost more. You set up the order, and if you didn't order the dessert, then you don't add it afterwards. You also use a bottle of wine or the drinks from home. So it's a way of managing the budget, yet having the convenience and a bit of the experience of a non-homemade meal.
Yes.
And you can shop around and see who's got a deal on for this evening.
Absolutely. Absolutely. That has been a key driver. In Europe, promotional activity undertaken by the delivery platforms has been massive all the year long.
Yes.
Same thing in the US. Yeah.
So this made to order section is actually built around the questions that we receive either by you contacting us, for example, myself at cyrille.filott@rabobank.com, or in this case, Thomas asked this question at a recent event that he spoke at. Another question that was asked to me in this case recently was about M&A in consumer foods or in consumer in general. We've seen a lot of deal activity with Kellogg's splitting up and then being absorbed by two companies, Mars and Ferrero. We've seen Kraft Heinz potentially splitting up. We are potentially seeing a split up of Associated British Foods in the UK. So there's a lot of deal activity, which may be led by investors not necessarily appreciating the value that is inside companies, and that's why companies want to split. Most of these, if not all of these companies, are actually listed on the stock exchange. So, which is a really interesting development. Of course, the top line movements are not that great. Volume growth is limited. We've seen the onslaught of GLP-1s. Who knows what happened? Cost cutting, you can only do so much of that. So investing for growth might be the answer. And the general question perhaps is more how to create value. And M&A may be one solution to that. Investing for growth may be another. So there's multiple sort of answers to this question on where this might go. Shareholders are, of course, critical. But Tom, I think you had some observations around this as well.
Yeah, I mean, do you invest for your shareholders or for the customer? That's kind of a theme that I noticed at RFDC was those that are focused really on investing in the stores or in the units, in the restaurants to improve customer experience. They're seeing top line growth. And perhaps those that are more focused on just shareholder returns and cutting costs and so on, maybe they're foregoing that customer experience, and that's a top line issue. Maybe I could be generalizing too much, but that's a theme that's going through my head. I don't know if you guys have any thoughts.
I think there is no. The answer is very simple. If you are a consumer company, long-term sustained growth can only be achieved by investing on your customer, on your client. Otherwise, it will not be sustainable. That doesn't exclude that you also need to be, as a company, diligent on your balance sheet management and your capital employment. And things change, things evolve, consumer preferences change, locations change, and companies should have the healthy habit of every certain time reviewing their portfolios and eliminating what is a drag in their financial performance, because it's not only about pleasing your shareholder, is that frees capital to reinvest on what is actually your customer and what is making you more profitable. So it's not one or the other. Both need to be done. If you are a relatively young concept or a relatively ultra-efficient company, maybe you don't need to review your portfolio. But for 99% of the business, time takes a hit and you need to reconsider all the different aspects of your business. Definitely you have more than one. Yeah. And what doesn't fit with you anymore may fit with somebody else. So your customer is the long-term growth, but you need to adjust your portfolio to how the consumer or the customer is evolving. Yeah. It's not one or the other.
Okay, good. Many answers to this question, whether we will see more M&A, because it's about investing, really, how to create value, and whether that is investing in the consumer or investing in the business. Let's see what will happen, but I don't think we've seen the end of all the activity, really. With that, Tom, Maria, team, I would like to wrap up this episode. We discussed so much, ranging from cocoa prices to Asian food to restaurants to retail. I hope for the audience that there was many things out there that you can sort of pick. Oh, that was interesting. We are happy to dive deeper, so feel free to reach out to any of us and have a further discussion. So this was the wrap-up. And with that, I would like to end this podcast. Thank you very much for joining us, either by listening or by viewing. Thank you, and see you next time.
Thank you, everybody.
Thank you. Bye.
Thanks for listening to this latest RaboResearch Food and Agribusiness podcast. To hear more up-to-the-minute expert analysis, search for Rabobank on your favorite podcast app and follow our channels. Visit research.rabobank.com for more.